Hello class, this is chapter 6 video lecture, financial statements and the closing process. Keep in mind this is just a slice of what accounting is about. So when you go to Accounting 200, you'll get the complete view of accounting, at least just for financial or for-profit organizations. So chapter 6. So learning objective is going to be prepare financial statements with the aid of a worksheet. So more than likely this is going to be done with an Excel document. So the worksheet is used for 3 major end of period activities: journalizing adjusting entries, preparing financial statements, and journalizing closing entries. So here's what the worksheet looks like. In previous videos we looked at the accounting worksheet that you see in the background there. From this worksheet we can prepare the financial statements. So first thing to do is prepare the income statement. Second is prepare the statement of owner's equity. Third is prepare the balance sheet. Now keep in mind it all starts with the income statement, then it closes to owner's equity, then it closes to the balance sheet. Okay, so it goes in that order, and accounting is about a cycle and a process. So if you like those processes and cycles, this is a perfect career for you. So heading should contain 3 lines: the company's name, the title of the financial statement, and then for month and for the date whenever the ending period is. So I just talked about those 3 items. Revenues are shown first. So then revenues, notice how it says revenues shown first. Now our revenues, delivery fees, that's a revenue. So our revenues, and then we'll also our expenses will come right there. So our delivery fees of $21.50, total revenues. Expenses are shown next. Those are the ones that are highlighted in orange. Wage expense, rent expense, supplies, phone, insurance, depreciation expense. Keep in mind, this right here is what you need also for your taxes, your revenue as well. Okay, and don't forget you'll pay taxes on your net income, which is the revenues minus your expenses. Okay, so keep in mind this is important, that total bar right there and your total expenses are totaled and they go underneath your revenues. And then don't forget there's a double underline underneath your net income, or your very bottom line. So 1015 is our net income. That means we have more revenue than expenses. If we have more expenses than revenue, then it's called a net loss. Okay, so next one is the statement of owner's equity. So our net income of, 1015 will close out into our statement of owner's equity. Okay, it starts with the capital balance as the beginning of the period. So when we first opened this company, or whenever Rohan first opened this company, he put $2,000 as equity, and that goes into cash. Okay, so then next with our capital account that's on our worksheet goes on to the statement of owner's equity. And then no other investments were made, so we don't put them. Next we add the net income or loss. So our 1015 then goes on net income for June. Now we'll go to the worksheet for the drawing account. So drawing means we took out money, or Rohan took out money from his capital account. So then our increase in capital is 865. So then from there we go 2,000, and then our net income minus 150 is where we get our increase in capital. So our total capital account for 28 is 22,865. Now keep in mind this statement of owner's equity goes onto the balance sheet next, and we'll look at what that looks like. So report form, liabilities and owner's equity section are shown below the assets section. This is the form you will see from now on in this text. Account form. Assets section is on the left, and liabilities and owner's equity sections are on the right. This is the form you saw in chapters 2 through 5. So the classified balance sheet, similar items are grouped together. Assets are classified as current asset, property, plant, equipment. Liabilities are classified as current liabilities and long-term liabilities. Current assets including cash that will be converted into cash or consumed within 1 year or normal operating cycle, whichever is longer. Examples: cash, accounts receivable, supplies, and prepaid insurance. operating cycle, the period of time required to purchase supplies and services and convert them back into cash. So it starts with cash, purchase supplies and services, provide services for cash and on account, collect receivables, back to cash. Property, plant, and equipment are assets that are expected to serve the business for many years, also called plant assets or long-term assets. Examples: land, buildings, and equipment. Current liabilities that are due within 1 year or normal operating cycle of the business, whichever is longer, they will be paid out of current assets. Examples of these are accounts payable and wages payable. Long-term liabilities are obligations that are not expected to be paid within a year and do not require the use of current assets, also called long-term debt. Example would be a mortgage on an office building. Rohan does not have any long-term liabilities. So current assets are listed first. So those are our current assets, and we put them in that order. Total current assets is $12.15. Now we look at our property, plant, and equipment. So we have delivery equipment and accumulated depreciation, which is a contra asset. So notice how it says less accumulated depreciation. That's why it's called a contra asset. So our book value for our equipment is $3,500, and on the balance sheet we put the book value. Okay, so our total assets is $4,715. Now our liabilities and owner's equity have to equal $4,715. If they don't, we made a mistake. Now for the liabilities. Just as with assets, the current or short-term liabilities are shown first. So account payable, wages payable, which we defined earlier. So it's going to go account payable. Let's shift to the lower part of our balance sheet. Okay, so wages payable is 50, account payable is 18, so total current liability is 1850. Okay, so there are no long-term liabilities, so move on to owner's equity. So then we bring our capital in, again, is $2,865, and now those two should equal our assets. So 4715 does equal 4715, so we are in balance, and that's exactly what you want. And additional investments by the owner during the accounting period appear in the general ledger capital account, are part of the amount reported in the unadjusted trial balance on the worksheet, must be shown separately in the statement of owner's equity. And let's see, we will illustrate additional investments using another business, Ramon's shopping service. Ramon Balboa's capital account had a beginning balance of $5,000. During the month, he invested an additional $3,000 into his business. The $8,000 balance in the capital account appears in the unadjusted trial balance on the worksheet and as total investments on the statement of owner's equity. So here's what it's talking about. So from the general ledger, $3,000 investment during the period. So from the worksheet, net income for the month is 21 less withdrawals of $250. So we have $1,850. So the total balance sheet is going to be $9,850. Okay. Journalizing the post-closing entries. What this does is it gives temporary account zero balances, so they are prepared to accumulate new information for the next accounting period. You don't just want those building up. Involves 4 closing journal entries. The income summary account is used to aid in the closing process. All accounts reported on the balance sheet, assets, including contra assets, liabilities, capital account, contain the results of all transactions since the business started. These accounts are not closed, okay? Accumulate information for a specific accounting period. All accounts not on the balance sheet, revenues, expenses, drawing. These accounts are closed, okay? So here's what this would look like. So revenue, delivery fees is $21.50. So $21.50, balance, delivery fees, $21.50. That also goes to income summary. Remember, when we have a debit, we always have to credit. So we're closing this delivery fees, our revenues, but we're putting on our income summary as a credit, okay? And let's see, let's journalize the entry. So closing entry, this is what delivery fees, $21.50, income summary, $21.50, okay? Step 2, close expense account. So income summary, each expense account is closed. Okay, so 700, okay? So every one of our expenses, the accounts or the entries that we're making currently are in orange, okay? Maybe you see red, but I see orange, okay? Now, all of those put together, if we notice how we have a debit here, all of these accounts in our, all of these values, these orange values in our expense accounts have to equal 1135. So then our 2150 minus 1135, our balance will be 1015, okay? So here's what it looks like. Our income summary is a debit and all of our expense accounts are right there, listed and the values. Okay, let's see. So income summary is 2150, expenses is 1150, our balance is 1050, which I talked about earlier, which is step 3. Okay, so the balance and income summary is the net income. Okay, by debiting net income summary, we close the account, and that closes out to capital. Remember our capital account? Those are the steps. Keep in mind, this is kind of just an intro. When you get into Accounting 200, we'll take a look at this in more detail, so keep that in mind. So here's a journal entry. The closing entry will be income summary 1015, Rohan capital 1015. So steps in closing process. This is for the drawings. Any draws, which is called a owner draw. That means they're taking money out of the account or the business. So the current one is done in orange. So it's going to be a debit to capital here and a credit in the drawing account. Okay, and that's how we get the balance of 2865 in the capital account. And here's the entry, capital for 150 because we're taking it out, and our drawing account of 150. Okay, and let's see, here's the closing entry 2150, and it has a 0 balance, and that's exactly what we want. So if you want to go through this, you can. Okay, go ahead and go through there. Preparing a post-closing trial balance, which is objective 3. Post-closing trial balance, prepare after posting closing entries to prove the equality of the debit and credit balances in the general journal or the general ledger accounts. Only accounts that remain open, permanent accounts, are listed. So here's what they look. This is what this looks like, a post-closing trial balance. Okay. So again, 4815, 4815. So we are in balance. So that's the good thing. And if we're not, we have to go back and see where we made the error. Okay, so there are only permanent accounts on the post-closing trial balance. Okay, broader view, you can take a look at this. It's also in the book. Objective 4, list and describe the steps in the accounting cycle. So analyze source documents, journalize the transactions, post to the ledger, the general ledger accounts, prepare a trial balance, determine and prepare the needed adjustments on the worksheet, complete an end of period worksheet. Okay, those are the steps. Keep in mind, this is going to be what we're talking about right here on this slide is going to be chapter 1 of Accounting 200. We're going to look at the steps of the accounting cycle. In 200, we're going to go through all of chapters 1 through 6 in 2 chapters. So keep in mind, we've done this in a semester, but in Accounting 200, we're going to go through all 6 chapters in this class, but in Accounting 200, it'll be done in 2 chapters. So the entire process. Part of it is because we have to get to some other and add new additional information so your understanding of accounting increases. Journalize and post the adjusting entries, prepare an income statement, statement of owner's equity, and a balance sheet. Keep in mind, this closes to owner's equity. Owner's equity closes to the balance sheet. Journalize and post the closing entries, prepare a post-closing trial balance. Okay, that's the end of this video. I hope you all are enjoying accounting. Please go in and complete your discussion questions. Make sure if you have any homework that's not done, please email it to me. I'm pretty flexible with stuff. I would rather you do it than take a 0. Sometimes even though the date for taxes is April 15th, people usually file extensions. So that in accounting, there are extensions. There are penalties though, so keep that in mind, but I am open for you turning in homework that is past the due date. So I hope you have a good day. Go on it. Yeah.